Some of the hardest problems in the world exist far above the planet. Our job? To launch the smartest solutions, to protect our satellites, clean up our clutter, to propel breakthroughs in propulsion, to learn more about our place in the universe, to outpace emerging threats. Every day, the Aerospace Corporation uses the latest technologies to ensure our nation's safety and leadership in space.
Hi, and welcome to the Space Policy Show. We have such a fascinating episode for you today. We are talking about funding space, investment developments, and commercialization trends. As always, you can find us on Twitter at #SpacePolicyShow, and you can ask your questions to our experts on Vimeo using the dialog box below the video. Also, if you want the latest and greatest from us, please go to aerospace.org/policy and sign up for the latest news alerts. So we have two important questions we're going to ask today, and our experts are going to answer them. Is this the end of the golden age of space investments? And how might the pandemic change things? Well, Karen and Jason are going to tell you. But before we get into that, I want to give you their backgrounds. Karen Jones, which you've seen on the show before, is a senior policy and strategy expert at the Aerospace's Center for Space Policy and Strategy. She has over 30 years of experience across diverse industries, including the federal government, IT, telecommunications, wireless technologies, remote sensing, the satellite industry, environmental technologies and services, oil and gas, mining, and renewable energy. Jason Rainbow is a group editor-in-chief of Finance Information Group, and he's been covering the commercial satellite industry since 2010. He started with connectivity business with a deep understanding of how important connectivity and data have become for the space sector's growth. Over to you, Karen, to get us started.
Thank you, Rebecca, and welcome everyone to today's Space Policy Show, where we will discuss investment and commercialization trends in the space sector. We are joining Jason Rainbow, who will hopefully lead us to that elusive pot of gold. Jason, as a reporter for the information service connectivity business, you focus on business intelligence for both space-based and terrestrial networks. Tell us a little bit about your focus before we jump into today's discussion.
Absolutely, and thank you. Thank you for that introduction, Karen. And yeah, like a rainbow, there's a broad spectrum of topics to get through today. So I'm looking forward to this discussion. Thank you for inviting me. So yeah, connectivity business has it has a 25-year history as a combination of two publications. It used to be Satellite Finance and Telecom Finance. Satellite Finance covered the commercial space industry, and Telecom Finance covered the communications infrastructure on the ground, terrestrial providers like fiber operators and mobile phone operators and data center providers and towercos. And what we saw over the years were these two universes gradually converging. And Satellite Finance, as broadcast revenues declined steadily, is still a large chunk of industry revenue, but the downward trend, companies there were increasingly looking to data and connectivity as that next source of significant growth. And in telecom finance, satellite was increasingly becoming part of the conversations they were having as they were looking towards next generation networks, so autonomous vehicles and things like that. So we decided to consolidate those two publications last year into Connectivity Business, which now covers the broad spectrum of connectivity from orbital infrastructure in space right down to the ground and what's going on there, and interplay between these two ecosystems. And we see that as a very important trend for commercial space going forward.
That makes total sense. It definitely makes sense to merge. So let's jump right in with the leading question, which is often a leading question with many discussions today, which is, how has COVID-19 affected space businesses? And I'll lead in a little bit with the government perspective, which is the government has become more proactive and continues to seek ways to use financial levers to prevent the collapse of key national defense capabilities, including critical supply chains and capabilities. So some of the financial levers that the government sector is exploring is, one, the Defense Production Act, DPA. Trump has invoked this quite a bit over the past year to shore up both medical and military capabilities and to address critical defense supply chains. You know, one of the fears is that some of these businesses are vulnerable to potential adversaries swooping in to buy US companies and assets that the military depends upon. So DPA is a financial lever. Another one is direct financial assistance through grants, loans, and maybe some type of cost sharing or arrangement or R&D cost sharing arrangement. Another one is just revenue enhancement. That can be an attractive option. For instance, the government could prepay for some services for cash-strapped companies. There's also longer-term contracts. Basically, revenue enhancement is a way to kind of help some of their suppliers in the short term get through this financial pinch. There's also some indirect financial levers, such as loan guarantees, investment tax credits. And longer term, there's always public-private partnerships, or P3s. Now, these are very complex risk and cost-sharing arrangements. Yes, they're an option, but they do require a significant amount of time to pull together. Last but not least, and I think this is a very important one to continue even after COVID, is policy and regulatory changes to make the business climate and the space business climate friendlier for commercial space. This includes streamlining various processes related to spectrum allocation and licensing, licensing of remote sensing satellites, and relaxing perhaps resolution limits, and simplifying export control regulations. So those are some of the key levers looking at this from a government lens. Jason, I'd like to hear how you view our options from a private sector or commercial perspective. Thank you.
Yeah, certainly the high level of support from the government has fed into the commercial side of things, particularly if you have a high exposure to a government customer. It's been very fortunate during these times of volatility to have that stable income stream. You know, we've seen long-term fixed contracts, sometimes accelerated payments, and that's been good for providing stability and encouraging a continuous flow of investment in the market. So it's been a good thing for the government and military sectors. But if you look at the commercial space industry on a subsector by subsector basis, it's an uneven picture. You have segments like cruise and in-flight connectivity providers that have had great challenges because travel has ground to a halt, and they've struggled a lot. But I think the overall picture, to step back, is for those satellite companies that put connectivity and data at the heart of their growth strategies. I think the overall picture is something of a positive. COVID-19 has kind of accelerated that underlying trend towards digitalization. And so if you look at consumer broadband, look at the figures from Hughes, installations have been challenging during this time, but demand there is increasing. The underlying trend is good. Of course, there have been bankruptcies, but even here, at the moment at least, it seems to be more about readjusting, restructuring financial facilities rather than like a chronic business failure. And that's because for a lot of these companies, it's that connectivity demand that they're chasing, which has helped keep them resilient. And you know, we've seen companies fall into bankruptcy, but then also come out. And so it's a positive trend, I think, overall for the industry.
Yeah, I think so too. So how has the pandemic and the current state of the global economy affected fundraising activities?
Yeah, that's been particularly interesting to see. I know it took a lot of people by surprise too, just how quickly some of these financial support systems have come back for the sector. VC markets in particular have proven very resilient broadly, but if you look at the space industry, there's a British venture capital firm called Seraphim Capital, and they track investments into space technology startups on a quarterly basis, and still early days, but they're tracking 2020 to be another record-breaking year. And of course, new space startup investments from the VC world, which is not a lot to build the ecosystem that we see today. So that was quite surprising to see. With Seraphim Capital, of course, their data set also includes segments like drones and balloons and HAPS connectivity, but other research firms are also pointing to 2020 being roughly on par with 2019 in terms of the investment level. So that's been quite surprising. And we're also seeing the IPO market starting to open up on the tech side, which will help. It will trickle down to the VC market and help bolster that further. Particularly interesting to see Momentous recently become the second pure play SPAC company to go down that route. So SPACs are special purpose acquisition companies that list and then they acquire an asset, and it's a fast track route towards an IPO, which can normally take about, it can take anywhere between 6, 9, 12, sometimes 24 months, depending on how complex your business is. And for space, it seems to be particularly well suited because it allows you to raise a significant amount of capital, and space is notoriously capex heavy, to do that quickly. But also, it seems to, it's a good fit because SPACs are good for companies that have perhaps a more convoluted, complex story to tell investors, perhaps returns that are a little far out. So this could be something that we see more of in space in particular going forward.
Right. Well, I've been reading quite a bit because this was kind of new to me, that special purpose acquisition companies, or SPACs. They are a capital raising alternative, but here I'm going to put on my bifocals and look a little skeptical, because these were known as blank check companies back in the 1980s, and they were associated with fraudulent activity and penny stocks, which gave them a bad reputation. Now, I realize the LA Times did a very nice story on how these SPACs, or special purpose acquisition companies, have been rehabilitated. The SEC has instituted some measures to make them more accountable, and there is more regulation now. But even so, even if there's no fraudulent activity, SPAC Insider, SPAC Insider, reported average returns for SPACs as compared to a traditional IPO are actually not spectacular. They're actually 7.6% returns versus a traditional IPO, which is 28%. So I think it's something we need to look at. The other thing, and this is one thing I want to ask you, Jason, original investors coming into an SPAC or SPAC often pay significant fees for the privilege of participating in this venture. And if the deal doesn't come to fruition, these fees are essentially flushed down the toilet. So what does this mean? Is there incentive for investors to keep going, to keep moving the deal forward? And if so, is that fuel for potentially an investment bubble?
It's a good question. That's a very fair point. I know there are many that are looking at this SPAC surge as perhaps a symptom of overinvestment in speculation lately, and that's fueled by the low interest rate environment that we're currently in. And I suppose, if you look at a skeptical lens, Momentous, like Virgin Galactic, which was the first pure play space company, went down the SPAC route recently in 2019. None of those have come out with commercial services yet. I know the numbers for Momentous have raised eyebrows. They haven't released their prospectus at the moment, but I think the valuation is something like $1.2 billion. They're expecting to make 90 million next year. So that's a It's a valuation multiple of about 63 times, which is very high compared to even high growth, highly profitable companies out there. So definitely cause for concern. But Momentous, they plan to ramp up very quickly. And you have big established institutions like Bank of America predicting recently that the space economy is going to triple in size from to about $1.4 trillion over the next 10 years. So a company like Momentous could help provide that foundational layer for that kind of growth. And like you alluded to, there are measures now in place that weren't in the 80s to keep checking things. But I think overall, when it comes to SPACs, you need to treat them on a case-by-case basis. I think they tend to fall into two camps. There are those that are built around an investment thesis for a certain market. And then there are those that are relying on the reputation, the track record of someone for making great deals. So on a case-by-case basis, you can kind of look into what makes sense for you. But you're absolutely right that it is something that we're seeing a lot of at the moment. It's good to be wary, but we don't know also whether this is just another fad to these kinds of alternative inorganic growth strategies. They come and go out of favor. Like junk bonds used to be very popular for fueling M&A. So we don't know if this is a trend that's here to stay at the moment. It could just be another fad.
Okay, interesting. I know we had talked previously about other investment trends impacting the space sector, including vertical integration and horizontal integration. Can you tell me a little bit about what you're seeing in the space sector?
Yeah, what's going on with vertical integration is just something that interests me personally, because it's been this long-running debate in the space sector. The merits of do you spend the capital to own and control your own supply chain, or do you just leverage the expertise of others, let them do what they do best, and go from there? And I think COVID has perhaps boosted the side of vertical integration a little bit. Certainly during the pandemic, having control over your own supply chain has been a great benefit. You're not just, for instance, not just waiting for parts to arrive in the mail. You can kind of keep operations going and keep moving forward. And it's also a tool for dealing with market uncertainty. And we've seen recently big wholesale satellite operators like Intelsat and Eutelsat kind of climbing down the value chain and acquiring service providers. So Intelsat bought GoGo assets recently, and Eutelsat came out with the acquisition of Big Blue Broadband. And getting closer to the end user like that is a great way for understanding the needs of the customer and as it changes, and having a more having your outlook, having more certainty about the way that the market is moving. So during these changing times for the whole industry, I expect a lot more of that to take place, probably through M&A, but also we're seeing alternatives to the traditional inorganic growth kind of come to the fore in the pandemic. So maybe more joint ventures and alliances and things like that. I see more of those kind of plays happening, particularly when it comes to satellite operators that are looking to climb down the value chain towards the end user markets.
Right. I want to ask you a question here, going back to vertical integration and going back to something that Attorney General William Barr said during his Senate confirmation hearing. He told the Judiciary Committee, "I think a lot of people wonder how such huge behemoths that now exist in Silicon Valley have taken shape under the nose of the antitrust enforcers." CRS, Congressional Research Services, refers to these sprawling digital empires, Google, Amazon, Facebook, and Apple, and notes that these digital platforms, could possibly engage in anti-competitive behavior. And there seemed to be bipartisan support around some research around this. And the reason I bring this up is that Amazon, which has traditionally been an edge provider, by that I mean Amazon Prime providing online retail services, major content service provider. That's their traditional role. They now have moved on. They've got Project Kuiper. This is a proliferated LEO. If this comes to fruition, it means that Amazon will be an internet service provider, owning the pipe, which is Kuiper, as well as providing major content, which is being an edge provider. This could possibly open the door to increased scrutiny by the Federal Trade Commission, FTC, and the Department of Justice, who may want to examine edge providers on a case-by-case basis for potential antitrust consumer violations. So I wanted to ask you about that. From what I know, it's not so much the vertical integration that triggers antitrust, it's how they behave when they are vertically integrated. Can you comment on that? And can you comment on how the investment community is looking at these large, sprawling digital empires?
Yeah, that's a good point. That's the downside of just owning everything, of course. And don't forget also Amazon, they have access to Blue Origin, which is another Bezos company.
Yeah.
If the moment they're keeping things very separate at arm's length, they're promising a level playing field for competitors. It's not just Amazon. I mean, look at SpaceX. They have Starlink, the broadband constellation. Yet they also are one of the most prolific launch providers out there that are helping to launch other satellite broadband ventures, which
that's true. Yeah.
Could compete with Starlink. It's definitely an interesting dynamic, and it'll be interesting to see how that shakes out. For the moment, there are these iron curtains between different business models, and they've proved themselves to be competitive. But it's a growing trend, and certainly if you're a customer of these companies, it would be something which would be a little bit alarming to see that increasingly being the case in the wider commercial space industry.
Right. Okay. Well, it's something to watch anyway. I haven't seen too many industry insiders bring it up, but I just thought that would be something to keep on the dashboard and watch and see how that plays out. Getting back to market forces, as we think about the space race, it's traditionally been Russia versus the US, but now we have these entrepreneurial private billionaires driven by idealism, conviction, and vision. And they have invested tremendously in space travel, space launch, space applications, hoping that it will pay off in the long run. So that's been a huge force in the investment community as you look at space investments between Bezos, Musk, and Branson. It's a huge amount of capital infusion. The other market forces that I think are really, really helping propel space investments is democratized space disruptors. And this is really, one of these surprises that happens where it's the classic Clayton Christensen theory of disruptive innovation, where a player comes in, starts with some kind of niche application or market, and then works their way up through the value chain. SpaceX, which is now, I think it's got a market cap of 36 billion, is a great example. But there's others as well, such as CubeSats, nanosats, and even do-it-yourself satellite kits. They start small. They might serve a high school or college, but many of these CubeSats are now working on very large missions for defense community and the civilian applications as well. And the disruption continues. We're starting to see flight software and open source software and standards and NASA's software catalog that allows free and downloadable software programs. So space is very accessible, space is downloadable, so to speak. It seems like this is really propelling that market.
Right, and that feeds into the sharing and virtualization that we see in the space economy too. Whether it's rideshare services like those that Spaceflight have been pioneering, to the cloudification of ground systems by Amazon and Microsoft and others, really lowering the capex so that other players can come in, more innovation, lowering that barrier to entry, which of course fuels the entire ecosystem. It helps build diversity, it helps attract more capital into the market, and it's a sign as well, and it's a very recent phenomenon in space, so that this infrastructure as a service model it's a sign of maturation in new space, and how we're now at the stage where we're looking to fortify the ecosystem, which is very exciting when you think about the sustainability of the market, which is a very important part of growth.
Right.
Yeah.
And to underscore that point, cloud services is part of that infrastructure as a service ecosystem. And Gartner Group estimated that, actually they measured that the growth last year in cloud system infrastructure as a service was 37.3% between 2019 and 2018. It's huge, and it's, the dominant players are Amazon, Microsoft Azure, Alibaba, Google, and Tencent. And they collectively represent 80% of the market. So, and they're growing really, really quickly. And there's also software as a service, which is taking off as well. So I think this is something, as you said, that will lower the barriers to entry, and we'll see potentially more players, and space will become even more democratized. So that leads to the next question, which is, how could the direction of the upcoming election impact the commercial space market?
It's a good question. It's I think, still highly speculative at this stage. One thing that's been clear is that the high level of spending by the government has helped contribute to the stability in the industry, which has been good for the market. It's helped to continue the flow of investments here, and I don't see that changing regardless of who takes the election, because it's been so good for keeping businesses stable and keeping the economy going as much as it can, particularly when it comes to national security and military and those kind of capabilities. Space will always be an integral part of that for all governments. So I don't think there will be any real change there either way. What we might see is a reallocation, perhaps, of resources when it comes to the civil space side. So maybe there we'll see resources perhaps moving from exploration and then more towards capabilities, satellite capabilities for combating climate change, for instance. But I think the overall picture is it's not really going to change regardless of which administration goes forward.
I think one of the things we might want to look for is, if we're facing low tide for government spending due to COVID and due to some constraints coming into play during 2021, I'm starting to see this term quite a bit, a whole of government approach. And this means, doing more with less, extending your mission to your other partners in government. So perhaps greater partnerships across the civil sector could ensure, basically greater access to any one mission and data. But the whole of government approach is something I think we should think about as we're facing, maybe a fiscally austere climate during 2021. So that brings up the next question, which is, what is the outlook for recovery? Are we facing a more challenging business climate for commercial space?
Yeah. Well, it's certainly been positive to see the financial support systems come back quicker than a lot of companies anticipated. That's a good sign, because then that underscores the investment appetite for space, which continues to be strong. That's a very good sign. It'll be a bumpy road ahead. I think I know there are venture-backed companies that have kind of hunkered down at the start of the crisis, thinking that we'll be out of the woods by now. But of course, this prolonged event doesn't really show much sign of recovering anytime soon. So they're now kind of coming out of hibernation. Their VC backers are kind of pushing them to just get on with it. So that'll be interesting to see how that shakes out. I know behind the scenes there have been a lot of distressed asset deals going on. Certainly pre-COVID, there were many companies that have been looking for an opportunity like this to kind of buy and build companies on the cheap to scale up, and they chased that $1.4 trillion opportunity that Bank of America talks about. So that'll be interesting to see. But I think the overall takeaway for me is it's a positive picture for those companies that have put connectivity and data at the forefront of their strategies, because what the pandemic has done is it's really shone a spotlight on just how important these services are for accessing education remotely, for working from home. And it's still too early to know whether a lot of these workplace changes will stick around after the pandemic eventually goes and clears. But I think it's a safe bet to say that there'll be a lot more remote working than it would have been pre-COVID, and we're seeing that too play in governments to there's this kind of reinvigorated need to close the digital divide. Take the US Rural Digital Opportunity Fund, which is opening the floor for competition between space companies and terrestrial providers for sizable grants for helping to connect remote regions, rural regions in a way they've never done before. So that's a very positive sign. So I think the underlying trend is good if you're a company going down that connectivity route. But we do need to see more high-level liquidity events. And you go to any conference, pre-COVID and now, go to a virtual conference, and the panels there will talk about this need for needle-turning exits and returns for investors, which is not happening in a big way. And that's needed to keep this cycle sustainable. You need to have that pull, so more investments can go in and you can have a healthy market. So we need to see more of that, but I think the underlying trend of it being something of a boost for connectivity is beneficial for satellite and space.
Right, and that's what the investment community calls the exit ramp.
Right.
Yeah. So, going back to what you said earlier about the pandemic, it has exposed, the serious consequences of Americans not being connected, and the need to connect and close the digital divide. And Satellite Industry Association has called for greater technological neutrality when considering broadband solutions to close this digital divide. So I'm hoping that the satellite sector will get some more of these rural grants, and that they will start to consider rural grants that focus on the entire spectrum of technological options, satellite and fiber. Okay, one of the things I wanted to ask you is, what are some key things to look out for in 2021? If you were to prepare a list, what are some key trends, some key emerging technologies that you think are promising, that space investors will be looking at?
Yeah, high on that list, like many space investors, would be seeing how these big LEO broadband constellations hit the ground. SpaceX with Starlink is already providing connectivity services. They've been helping connect emergency vehicles tackling the Californian wildfires. But how do you deploy that to the average consumer for broadband? What is demand like? What are people willing to pay? What is churn like? How sticky are these customers? Are they something they just want to try and then move on to other alternatives later? We don't know. So that'll be very interesting to see very soon. And then we have OneWeb, which recently emerged from bankruptcy with new owners. So it'll be interesting to see how those new owners, which involves also the British government, kind of changes the game plan for them. Because there is talk of them adding a navigational element to their constellation, which will help differentiate them from Starlink and others too. So how that plays out is particularly interesting. And those constellations are the big, big headline players in this market. They get a lot of attention, but there's a lot of traction happening too for satellite constellation providers that are looking to provide more basic level connectivity. Companies like AST Science, so they raised more than 100 million. Yeah, they raised more than $100 million in March, I think, to provide connectivity services that would work directly with your handset without any need for specialized equipment. And what's particularly interesting there is this investment round was co-led by Vodafone, which is a big European mobile operator. So it's more evidence of the satellite and terrestrial connectivity worlds kind of coming together and working together for this new age of connectivity. And you think about IoT and digitization accelerating. So that's very exciting. Also in the background, you have 5G and what's happening there.
Before we go on, I want to mention the direct satellite to phone connectivity. I think that's the holy grail in some ways. That's going to be an amazing feat. If we look at what the possibilities might be, you do have AST Science out of the UK with Vodafone, but you also have Link, also referred to, I think it was formerly known as Ubiquilink out of Virginia, and Apple. Bloomberg last year in December announced that Apple was working on a secret program to beam internet services directly to iPhones. It's very much under wraps, and we haven't heard much in the media about that. But I think those are the three plays, and those are the three companies to watch: AST Science, Link, and Apple. And it's going to be interesting to see if they can make this work. They're probably looking at connecting with LEOs, which are flying at around 7.5 kilometers per second. So how do you manage that? It's basically what's called the Doppler shift. How do you manage that and make the connection? Link, back in late February, used the Cygnus cargo vehicle that Northrop Grumman has to resupply the ISS, and they successfully demonstrated text messaging from the Cygnus vehicle down to various types of mobile phones, both an Apple phone as well as I think an Android. So that was a very exciting demonstration. But going on to 5G, I didn't want to interrupt, but I'm very excited about that technological development for direct satellite to phone. And I do think that it'll be interesting from a business model perspective. So what would happen here? Would they go it alone and develop their own service, or are they going to work with mobile network operators and be a value-added service?
Right. Well, that's the interesting thing. In the background, what's happening here is we're seeing more partnerships and more alliances happening between the terrestrial world and the satellite world, which hasn't really happened in the way it's happening now. If you look at 5G, where satellite operators are playing an active role in the development of new standards. For the longest time, the satellite providers and terrestrial wireless providers, they kind of evolved in parallel to each other with their own closed systems that didn't really have a lot of, collaborate too much. But now we're seeing them evolving together. So it's exciting to think about what opportunities that could play. And as you can probably tell, I'm quite bullish on connectivity in general. with 5G, mobile operators at the moment, they're struggling to monetize. The ones that have rolled it out are struggling to monetize the standards because there isn't a killer app yet that will draw in that demand. Right. So with 4G, we had, we saw services like Lyft and Uber, ride-sharing apps, and now food delivery services that really helped to change society, and that was only possible with 4G. 5G hasn't had that happen yet, and it's tempting to think that satellite could play a key role in whatever that is. And when you think about autonomous driving and other applications that we seem to be moving towards, that could change the game in terms of demand, which is already stellar. But yeah, so with these direct satellite to phone providers making traction, there's a lot of technical issues, like you said, to clear out first. But with that momentum comes with terrestrial and satellite increasing the level of partnership and collaboration, which will open up new market opportunities, which is great for the overall industry, of course.
Right, and let's not forget the resurgence of the geo market, specifically micro geos, like smaller satellites that are, like in the 300 kilogram range. Astranis is a player here. Smaller, cheaper, agile. Right now they're working with Pacific Dataport out of Anchorage, Alaska, to serve all of Alaska from a geolocation, longitudinally aligned, to go right up and hit most of Alaska. So we're starting to see some good plays there as well. Okay, here's our last question to end our webcast today. We have experienced what some have referred to as the golden age of space investments. Are we still in that age, or have we passed that? Jason?
There is obviously a great deal of uncertainty ahead. I think it's going to be a very bumpy road. But I don't see this as the end if momentum continues like it has, despite the pandemic and the way the economy is. I think it's a very good sign. I think it's a good sign you have giants like Amazon coming into the industry, with the $10 billion initial commitment to Kuiper. They have the resources and the intelligence to tackle a lot of the industry's problems. But we do need to see those high-level exits. A failure in the market, especially in the VC world, it would be fine. It's normal, but this dearth of exits is not normal. So we definitely need to keep an eye out for those.
Right. Robert Shiller, Yale economist, wrote the book Irrational Exuberance, and he noted that there's 3 characteristics that you should look for when suspecting that there might be an investment bubble. One is certain precipitation factors that are political or technological that could steer the industry in a new direction. Another one is cultural factors, news media, maybe greater pessimism in society and the world. And the third are various psychological factors, such as overconfidence and the lack of maybe statistical information. But you can only call a bubble after it pops. In hindsight, it's a bubble. But today you gave us quite a bit to think about, Jason. I really appreciate your time today. Thank you for being on the Space Policy Show.
Thank you for inviting me. It's been an absolute pleasure.
Thank you. And back to you, Rebecca.
Thanks, Karen and Jason, for that great discussion. I would love to give a special thank you to our production team, James Liggins and Sarah Panoni, located in the LA area. We could not make this show happen without them. So thank you so much. We really, really appreciate everything that you do. As always, you can find us on Twitter at #TheSpacePolicyShow and Vimeo. You can ask your questions in the video dialog box. You can get the latest news alerts if you go to aerospace.org/policy. Speaking of aerospace.org/policy, we recently released a set of discussion papers called Space Agenda 2021. at that website, and it's on topics that are already at the forefront or that are likely to emerge in the next few years in the space enterprise. In addition to highlighting the issues, the series offers a concise background, analyses, and options to aid government decision makers, industry leaders, journalists, students, and other parties who are interested in the future of U.S. space efforts. Again, that's aerospace.org/policy. You can't miss it. It's right at the top of the page. And until next time, take care.